Hey everybody, happy Sunday. Welcome to episode 2 of season 2 of the Trading Pit. Today's agenda really is filled with a ton of awesome stuff. Segment 1, we're going to go over the watch list with Jason TheStockGuy, who is a Twitch streamer and more of a fundamental trader. So we're going to have the aspect of the charts, but also the fundamental aspect as well. Segment 2, the broad market recap. We're going to go over the broad market ETFs as well as the volatility index, which absolutely exploded this week. Segment 3 is talking with traders, and we're going to go over Greg Krupinski's way of viewing the markets, how he trades, and how he got started as a young kid at age 8 or 9. It's just fascinating how early he got started. Segment 4 is going to be weekend chart requests. There's so many that I really can't name them all. So make sure to listen in and definitely watch segment 4 because we have at least 10 tickers coming your way. Alrighty, everyone, into segment 1, the watch list. We have Jason, aka the Stock Guy, who is very well known on Twitch. And without further ado, Jason, thank you so much for joining. And what do we have to talk about today?
Thanks for having me on, Jake. We're just wanted to go over a few plays that we've made recently regarding, some of the momentum we've seen. We've seen an absolute actual V-shaped recovery. A lot of people have, been waiting on the sidelines for the expected second pullback within the market, which we haven't seen. We have no idea if we will or not. So, while we've been playing a lot of these, upswings, there's been a few that I've played recently and a few more that I'm looking at until this cool off does potentially happen. It's just more along the lines of been playing what's in front of you, what sector has been rotating from what, whether it was during the beginning of the pandemic with big box stores and COVID candidates moving over to the low-hanging fruit with hospitality and travel. And now it's a lot of the focus on the possible reopening of where that money's been moving within the equities. But the market itself has been just popping everywhere. And it's just been a money grab. And anybody who's been on the sidelines has been missing out on it, unfortunately.
Oh, yes. Oh, yes. So we have Love here right now. Is this one that you had recently made a trade on?
Yeah, so we recently did this. My community, they have their minds their own. But one of the things that we focused on over the last probably 3 weeks to a month was airlines. Now I know there was a lot of speculation with Buffett dumping his shares that it was the end of airlines, and I'm sure that he dumped it at that position, focusing on the long-term fundamentals and probably an actual shift within that sector. And I don't disagree, but money has been pumping in. I mean, we've seen an uncharted history. I mean, or sorry, not even history, just unprecedented money and liquidity being pumped into the markets right now. Trillions of dollars on the balance sheet of the Fed, and that money's got to go somewhere. And between that money from institutional trading, from a bunch of college kids with Robinhood accounts, these have been the ones that have gotten the love a little bit later than some of the other ones in the beginning. Obviously, tech has been driving most of the market, but there was a lot of low-hanging fruit. And after looking over all the airlines, I said to myself, which one is best positioned for a quick rebound? Not that I wanted to buy into these for a long-term hold, but where was the quickest rebound and the most potentially, less volatile, but growth-wise. So I looked over the big airlines, United Airlines, Delta, American Airlines, and said, okay, well, these have the chances with government bailouts and stimulus money to have some of the greatest short-term returns. But, the expectation of that up and down, profit taking, buying, profit taking just didn't do it for me. So I went over and looked at the smaller budget airlines who are used to running on a budget, who aren't as concerned with overseas flights and shutdowns and travel restrictions. And there was a lot more that go into that. And so I came down on Love. I waited a little bit from the bottom. Obviously, you can never really time it perfectly, but on the first pullback from the beginning of May, where we saw it go from 22 up to around 29-ish, the first pullback, it just was like, okay, this is the buy the dip opportunity. So went in on that position on 28 and decided to continue to ride it. And I had an out position. I was thinking, okay, I could see this run into 50 by July, but we'll keep an eye on it. Then came the protests and the reopening of the states. And when we started seeing, all of these people, in reopening, going out to businesses, protesting and whatnot. We saw a lot of people coming together, and the chance of a resurgence of the coronavirus kind of said, okay, there's a chance. And what will that be like? Well, look at the gestation period, look at how long it takes. This past weekend was the point where I was like, okay, you know what? If that does happen, I want to be out. Didn't sell on Friday, waited till Monday, saw a spike to 40, decided that was my out position, took the sell at 40, and we've seen it actually pull back as much as 10% since then. So the out was almost spot on, and it was a great trade in a short term, less than 3 weeks.
Beautiful. And it almost looks like that's just a healthy pullback. It's, all these things have, people would say, oh, the airlines are tanking. But if you look at the chart, I mean, you can't go up forever. You have to have some type of pullback to bring in new buyers and have those buyers create a base. So, this almost seems like it's trying to form another base here.
Absolutely. And if we do get to another buying frenzy within the market or the sector movement, I'm still a fan of Love and the other the other discount airlines like Save, JetBlue, and what. I'm more of a fan of the structural, integrity on the growth as far as the volatility of the larger airlines.
Makes sense. So, with your other trade that you want to mention, was it in the same sector? Were you playing rotation, or was it almost a completely different thesis there?
So what I did was I have a theory that I generally don't like to sell a position unless I have another position I'm ready to move into, especially with long-term holds or swing trading. I don't want to have money just sitting there. Now I have money on the sidelines right now because of the possibility of a market pullback and buying the dips as divvies and others. But I don't like to generally move out of a position until I'm ready to move into another. I don't like too much cash sitting there, especially when there's a buying frenzy going on. So I play what's in front of me. So we saw Cloudera. Now, Cloudera is within one of the 3 sectors I'm eyeing as one of the biggest, movers and growing sectors coming out of coronavirus. I think there's going to be an actual fundamental shift in the way globally, how we work, how we operate, and how we, do things at distance. We've already seen MasterCard, Jpmorgan, several of the large companies start making work from home permanent in some of their positions. I think a lot of businesses are going to see that it's cost effective and they're not getting the decrease in productivity they were worried about. HR issues, insurance issues. I think that we're going to see a global shift to work from home, remote working, and remote learning. And with that, I'm looking at cybersecurity, cloud storage. I'm looking at teleconferencing sectors. So I saw Cloudera have a huge pullback on their earnings. They didn't have a terrible outlook, but there was just so much of a run from the beginning of May until their earnings that we saw a huge pullback. Dropped about 9% day of earnings. I like to wait another day to see where its dust settles. I waited until Monday, which was the perfect timing because that's when I sold Love. So I sold Love, took the profits, moved it into Cloudera, and not because I was a believer in Cloudera, but more so as I was believing in a melt up from that sector. As that sector and the big boys in that sector get bought up, I was expecting a melt up. So I went in at 10:07, a little bit more than I wanted to, but I didn't want to wait too long. And that was on Monday. On Tuesday, we saw a slight dip in the morning, and then it shot up. And the idea for me was, okay, I want to play only a melt up gap from $10 to $11. That was my play. Figured it'd take a week to 2 weeks. That day, not only did we see it shoot up to 11, it came back down a little bit, went up to 11.50, came down. I saw it settle and flag out around 11.25, sold there. And then something I was expecting further down the road happened that same day, and there was rumors of a buyout. It actually jumped to 12.50 that day. So I sold for an 11% return. So I took that 43% gain from Love, dumped it all into Cloudera, and sometimes you're just right on the money, 11% in a matter of an hour and a half, profit took and walked out. And so that was the play there. So that was an easy boom to boom right there.
Beautiful. Awesome. Yeah, just a quick comment. I went to dinner last night, and I'm looking for the menu, and they're like, yeah, we don't have any. I'm like, how do I look at what you have? They're like, oh, you just gotta take a or scan the barcode. I'm like, what the heck is this? But honestly, like you said, I think this is just a paradigm shift that kind of was accelerated by 10 years probably because of this.
Yeah, we saw that with Amazon. One of the big concerns for Amazon before coronavirus was how could they get more people signed up for their grocery delivery service? They were actually having an issue with getting that up. And when Corona hit, it became not only the norm, but they got such an influx that they had to put a waiting list out there. I mean, we're literally going to fundamentally, regardless of how long it takes for a vaccine, we're going to see a fundamental shift in the way human beings interact outside of forced interactions. And I think those are the sectors that we're going to see the biggest growth in the next 3 to 5 years.
It's just crazy how much of an inflection point the world is in so many different ways. So going forward into the summer, what are you thinking as of now? Are you still thinking the rotation type play is still a thing? Or are you thinking, as kind of expectations maybe start to, because everybody knows there's going to be possibly a second wave. It's not coming out of randomly out of nowhere. So is that going to possibly cushion the blow and help some of these companies like your airlines or your industrials kind of catch up with some of these other plays?
It could. I think it's a lot of unknowns. I don't want to speculate too much. I'm a believer right now of playing what's in front of me. I was on the sidelines from SPY 220 to 255. I was anticipating a crown recovery, but at some point I was like, okay, you know what? It's not about what I think and what I feel. It's about what's in front of me. And that's where I said, okay, I'm going to follow the money. One of the plays that I've been playing and I think is going to continue to go is actually Budweiser. I don't have the chart, or Anheuser-Busch. I don't have the chart up, but I was noticing during the recovery and the gap up of a lot of sectors that I didn't see Bud quite get there. And we've seen that move actually a lot recently. It's moved as much as 35%.
Wow.
But I think that now it's more about, if we continue with this unlimited, liquidity and zero interest rates with Powell today, or this week, talking about zero interest rates earlier on Wednesday. We were talking about, just this money flowing in, and at zero interest rates, it's just free money. It's okay. I'll take your money and pump this sector. So the idea is where are you getting your dips at? This is a buy the dip market. It's a buying market until it's not. And while it is, it's where the dips are. One of the ones I'm looking forward on currently is actually GE. Now, I'm in GE from around $6. I got a little high. I mean, you can't time it perfectly, but I got in around average about a little over $6. It did pull back a little bit. I'm actually looking at GE into next year. Do I think GE is going to be returned to glory? Absolutely not in the short term. But GE made a fundamental shift right before the end of the year last year, where they went from just the appliances and just, what they were always doing, to airline engines. And, Rolls-Royce has kind of had that market. So they go in, they get a run. GE goes to $13, almost 100% return last year. And then coronavirus hits, and the 737 MAX issue with Boeing before that. We just saw all these things. And so what made them turn the corner to be a better company was also their downfall in the short term. Yep. However, with airlines going back up, with the return to normalcy, with contracts, 737 being behind us, and with Airbus, I mean, there's potential there. I think GE reaches $10 next year. I'm not saying it's going to go to 20, 25, but I see a $10 return to $10 by next year if we continue in this market. So I got in a little early, about a day early at about $6. And as of 2 days ago, actually a 33% return in just a couple weeks. I'm going to ride this, and I have some leaps on options as well. I'm going to ride this. Actually, if you look at the chart that I have on my screen right now, if you look at the teardrop chart here, you're actually seeing that today represented a blue teardrop. And from using TrendSpider, though it's you're never going to have 100% accuracy, but generally teardrops kind of point to a shift or a turning on one way or the other. And in this case, if you look at the chart, the last couple of times we've had a blue teardrop, we did see a reversal in the opposite direction. I mean, you can see it in March when we were at the bottom. You saw it again a little later in March. Here in the beginning of May, a couple of weeks ago, actually when I entered is where a blue teardrop was at. And lo and behold, today we're there again. Now, obviously indicative of market and sector sentiment, but I still think that GE is going to $10. Market, stability, means something there. But if everything stays in, I see GE returning to $10 by next year, especially with airlines coming back.
Yeah, and there's a few gaps above as well. It's so funny that you mentioned the blue raindrops, because literally I bought. So I was kind of like you. I entered a little early. I actually capitulated, and then I got right back in once I realized I screwed up. But I mean, that blue raindrop on the SMA 50 right there, I mean, you cannot make that up. And you could
Mm-mm.
see, a lot of the buyers, a lot of conviction above the buyers, right above that simple moving average. So that was an epic move there, and glad. I think a lot of people were able to catch that. I think a lot of people kind of got flushed, and then everybody kind of got back in once they realized that things were at least turning around a little bit. So love it. GE, great analysis. Thank you so much for doing that. What's the next one you're thinking?
So this one is more, I think, speculative in a way, but I think it's going to be the next. If all things go, I think it's going to be the next one to keep moving. I think that there's two takeaways from this, and that's going to be PayPal. PayPal is a company that I played heavily in 2019. PayPal has made some serious moves in the financial world, not just in the local area of North America, but they're really moving out into the international. They're building up their infrastructure for the long term. Now, I played PayPal a lot from 100 to 120 last year. I loved their move when they took a 40% stake in WePay, which is in China, which is their payment service. They did a $200 million infrastructure investment into Africa last year, getting into their payment system. They're now moving into Southeast Asia. I think it's Indonesia. They just moved into a delivery service there for payment. They own Venmo. Now, there's two takeaways from this. One is I get a question a lot is StockGuy, why would you take PayPal over Square? And I'm thinking further down the road. I think Square is great, but my issue with Square is twofold. Number one, Square is merchant-based. And, we're talking merchant-based in an economy where businesses are closing down at a record number. There's going to be a lot of small businesses that use Square that are not going to be able to use it. There's going to be a slow return of other businesses to replace them. And not only that, Square is kind of North American centralized. So there's a saturation in their market share. They're really not as worldly and as far broadened as PayPal. So I look at PayPal and I say, okay, not only is there, this shift where we're going to see more and more online payments and less in-person payments, with social distancing that will be happening for a long time. But you've got them setting up infrastructure across the world. And, it's like, okay, can they keep this up? I mean, PayPal doesn't have the same issues that Visa, MasterCard, and others have where they have to worry about people paying back debt. I mean, this is an instant transaction. And they're paying back. I mean, people lose their jobs. They're not paying their credit card bill, but they can still send money. I mean, we just saw that with MoneyGram this week. I mean, MoneyGram I played has just been running ever since the Western Union takeover. But back to PayPal, here's the issue with PayPal, and this is a humbling thing that any trader has to recognize, is you can't wait forever. So I didn't get at the bottom. I was playing other things, and then I saw PayPal back to 120 where I played it last year. And I said, okay, time to get back into PayPal. But I think it's going to come back down. Let's wait till earnings. That was a bad move. Earnings absolutely crushed it. We saw it run to 140, pull back a little bit. And so then I had to sit back and say to myself, am I going to wait forever until I get in here because I think I missed the boat? Or do I get in now instead of looking back when PayPal's at 250 and saying, wow, I really wish I got in at 140. And so I'm in PayPal. I think PayPal is going to continue to run. I know looking at this chart, it's like, wow, that thing has gone up 40% since the top before the wreck. And if it falls back down, I'll DCA. I think PayPal has a lot of future. I think that they really set themselves up infrastructure-wise in the Asian market and the emerging African market and Southeast Asia, which if anybody watches GDP in emerging markets, India and Thailand and Vietnam are really moving up.
Fantastic. Well, I really, really appreciate you coming on and sharing your knowledge, sharing some of your experience over this last couple crazy months. And your fundamental perspective is incredibly just knowledgeable, because a lot of people who look at charts, everyone likes to look at the fundamentals, but some people don't even think about the fundamental side. And sometimes that can be not the best thing. You always have to have a mix, a hybrid strategy. And so the way you explained everything was just absolutely fantastic. And thank you so much for being a guest. And we hope to have you on again soon.
Absolutely. And I really appreciate it. And stop by the show anytime. You guys are always welcome. Just, pop in anytime.
Alrighty, everyone, into the broad markets. This is one of those weeks that is very weird because the daily is telling us one thing and the weekly is telling us a completely different thing. So going into SPY, we did talk about this setup. I really haven't changed the chart since last week. And what we did here was we anchored the volume by price from the year to date. So that means on January 2nd, what is the volume profile and where are all of these shares being distributed since this point in time? And what we can see here is we can literally see that on the daily, you've got this huge area of confluence that literally caught a bid almost perfectly. If you check out our midweek video, we were talking about this area of confluence. Essentially, we've got that Alpha Trends anchored VWAP from the May 14th low, and then we have this next little volume shelf forming here. So the fact that it did hold and we closed above this anchored VWAP, I don't know. So that's one perspective. Weekly perspective is a completely different perspective. We've got this 1, 2, 3, 4, 5, 6. And essentially what I've done here is I've highlighted all of the weekly candles that have either pretty much tweezer topped or opened and moved up above the previous high and then closed or not closed, but just actually moved below the previous low. So you can see here on number 6, we tried to break out this week and literally went straight down. We took out the previous high, we took out the previous low. And if you look over the past, anytime we've had this setup after a huge move up, and I would literally, I think, yeah, this is the biggest move up like ever in this shorter period of time, at least for a recovery. And so when you've got this type of movement, and then you've got, other examples of this type of setup really pulling back, that would be some fuel for the bears. So, the bulls are looking at this Alpha Trends anchored VWAP from this May 14th low holding, but then the bears are looking at this massive candle here and they're saying, all right, that's weird. This is really showing some selling pressure. Now, remember, there is one example here, number 4, where we did have this same setup. We took out the previous high here, we took out the previous low, and then we actually melted up, continued for about 7 or 8 weeks. So, this is pretty much right at the bottom of 2018. So it's pretty interesting to see that we are kind of starting to form a similar pattern here. Will this form with a big white candle here and a continuation up? Or will this be a continuation down with a flush coming next week? Nobody really knows. That's why we have charts to give us an idea. But that is the look from the bull and the bear thesis on SPY. Going into the Qs, we've got something very interesting here. We've got the year-to-date volume by price as we did on SPY. Notice that we bounced off this previous volume shelf here that was acting as kind of a launch pad, and now it's acting as support. And if we just draw a horizontal line here, we did actually close below this previous area here, which would maybe be considered bearish for those that are using candlestick patterns. But all in all, we did bounce off this area, this kind of volume shelf. But then we go to the weekly, and I mean, you can see if anytime you've got this very kind of defined setup here, you've kind of got this big wick at the top, and then you've got a pretty strong move down. Same exact thing happened in February, and we're literally having the same exact setup now, except a little different here. So, all in all, this is something that can go either way. Nobody knows what's going to happen next week. But if you're looking at these patterns, that's something to at least keep in mind in the back of your head. Going into IWM, we do have some really cool case studies to go over here. One, if I turn off the volume profile here, you'll see that this price action respected this support perfectly. I mean, to the T. And so, will this trend line support hold? Will this gap fill next week? We'll just have to see. The main thing that I want to go over here is the fact that the volume by price from the start of this downtrend had this big supply zone above. And we've been talking about this supply zone, way down here. We finally melted up to it, and look at how perfectly it got rejected. I mean, you really cannot make that up. So the fact that this is a huge engulfing candle as well does not bode well for next week, but it's the market, and we can confidently say anything can happen. Going into the last one, VIX, we do have a pretty epic breakout from this week. We do not have a test of the 50% retracement like was possible today, but all in all, you did have some selling pressure. But that weekly candle, I mean, that is a massive move up. But if you look back in time, we have had these types of candles before. So notice here, we initially popped, pulled back, had a huge candle, and then continued to melt down. So all in all, nobody really knows what's going to happen. All we can do is really look at these ETFs, look at the VIX, and get an idea of what may happen into next week based on past patterns, based on indicators, and that's exactly what we've done here.
So hi, everybody. Dan here. And this is a segment that we call Talking with Traders, where we do a little interview and get to know the people behind the trades. So I've got a very special guest with me today, Greg Krupinski, who is a pretty prevalent trader on FinTwits. You see a lot of his charts out there. He also happens to be one of my favorite people in this business, and that's because he's just a normal dude. So Greg, thanks for being here today.
Hey, thanks so much for having me. Appreciate it.
So you're a normal guy. You have a day job. How'd you stumble into trading stocks?
Well, I've liked trading from a very young age. It actually started, I don't know, I was probably 8 to 10 years old or so. And back then, the Boston Celtics were a publicly traded company, and I liked the Celtics. And my dad bought some shares in the Boston Celtics, and they sent the old stock certificate. So I hung the stock certificate on my old bedroom wall, and my buddies would come over and be like, yeah, and I don't just like the Celtics, I actually own them. Like, I have the proof right here in the frame. So that's kind of when it started. Then kind of coming into high school, for me, it was kind of during the tech boom. And that's when I kind of started really getting into it and actually, making money from summer jobs. And I wanted to open an E-Trade account. So I opened an E-Trade account and I had no clue what I was doing, but I knew I liked it.
I think a lot of people can relate to that. Do you still own that Boston Celtics stock?
No, they were sold to a private equity group a long time ago. So they sent when they sold the team, they sent a check for, it was something small. It was just a small number of shares, but it was it was pretty neat.
That's cool, right? So what took you from that one share to the idea of buying and selling versus just holding on to it?
Yeah, so I kind of evolved. When I first started with this, the tech boom was going on, and what I would do, my strategy is I would look for companies with the lowest PE, and I think I thought I had it figured out, right? This company is cheaper than the other ones. So I'm going to buy these cheap companies. I'm going to make a bunch of money. And, that was far from the truth. I had, so much turnover, paid so many commissions. And the ironic thing is this is like when the tech boom's going on. So I could have almost thrown a dart and made a little bit of money at some things, but I was focused on, stocks that were overlooked by the market. And, as a lot of you all know, if things are overlooked or undervalued, it's usually for a reason. So,
it is.
I kind of found that and I kind of continue to evolve. I am an accountant, a CPA, so I was more into the fundamental side of things. But over the years, especially in the last 10 years, I still kind of follow that company fundamentals. I could use it for screening or for idea generation, but for actually buying and selling shares of the company, I mean, you need to manage risk and look at charts, in my opinion. So it's kind of been a evolution, and it's not, nowhere from finish. I'm still learning and making stupid mistakes every single day.
Who isn't, right? I'll take it.
Yeah.
So I'm curious, as a CPA, right? In the corporate world, I'm sure you're in meetings, right? There's phone calls. How do you actively trade while doing that?
That's a good question. So yeah, some of my days are pretty jam-packed with meetings and just things I need to work on. So I really don't have much time during the day to trade or check in on things. I never would count on it. So I have to do a lot of work on the weekends just to kind of generate watch lists, see what interests me. And then I kind of live and die just by, alerts. I'll set up my alerts in TrendSpider. I mostly trade breakouts or, retests of those breakouts, pretty simple stuff, horizontal levels. Yeah, I do some other things too, but that's the bulk of my trading. So that could be done pretty easily with a full-time job. If you get some alerts going off, I could, find a few minutes to check it towards the end of the day and say, hey, do I still want to buy this? Yes, no. So when I'm being disciplined and doing things right, yes. It's
Okay.
when I start trying to get off of that, when I start trying to get a little cute and, trade quicker and, do the silly things like buy some like weekly options, they'll work out sometimes. But for me, more often than not, I just need to kind of stay away from that and stick to my process. And when I do that, I can do well. It's, when I deviate from that the losses come.
I think a lot of people would agree with that. You mentioned trading breakouts, which is something I do as well, right? But I'm also, I'm very rarely away from my screens. So when an alert goes off that, because I'll usually create like an alert that, hey, I'm wrong, right? Like an oh shit alert, right? So when that alert goes off, I'm at my screen. Usually I can react to that. How do you manage risk? Like when you enter a trade on a breakout, and then you've got to do a 2-hour phone call about a financial statement.
Sure. The emotion part has gotten pretty easy over the years because I've, taken so many losses. I could care less anymore. It just, the more you do it and just realize that's part of the process, that's not a problem. But in terms of controlling risk, so whenever I enter a trade, if it's a breakout trade, for example, as soon as I initiate the order, I will set my stop immediately. So, typically I'm looking to trade, I usually don't want to risk more than usually 0.5% of my portfolio in a trade. So I'll kind of figure, I'll have my position size predetermined. I'll know where my stop's going to be, depends on the volatility of what I'm trading and things like that, but it's going to be, probably around 5%, give or take less than where I entered. All depends on the setup, but so I enter that stop immediately. So if it, if I enter the trade and it goes down and I get stopped out, that's just part of it. Obviously, sometimes, then it can start running without you, but, you can't avoid that.
Absolutely. So I'm curious, do you ever hedge in those types of scenarios, buy some puts to offset? And
I sure do.
widen your stops?
Usually it's not a winning strategy. I do actually. So lately I've been, maybe I'm getting old, but one of my favorite things to do in trading anymore is during the weekend or at the end of the day, just to go through my portfolio and look at my stops and raise them. I just take a lot of pleasure from that, just raising my stops up. I don't know why. I just like that. I guess it's just, acknowledging that the trade's good and I'm, guaranteed to book some profit. But as far as hedging goes, I do, by puts, I'll look for, kind of shorter term resistance levels. Like just this week, I was looking at XLF, the financial ETF, and it had been, running up quite nicely from the lows like everything else, but it was moving into a spot where there's a big volume by price. I'll use that quite a bit in TrendSpider. I anchored it to the December 18 lows and it was hitting the declining 200 day. So it looked like a spot where I might want to get some, some puts. Maybe I'm wrong, but I knew if I was wrong, I'd know quick and get out quick. So I did buy some puts there. Actually sold those today. But yes, I do hedge from time to time. I don't like to do it blindly and just feel like, okay, things have gone up too much, I'm just going to buy some puts. I always want to have a level to trade off of to tell me when I'm wrong.
I think that's smart. I think one of the mistakes that a lot of traders make early on when they first start trading is their level will get hit, right? And then they're like, wait, maybe I drew my level wrong, right? So then they move their level, and then it gets hit again, and they're like, well, shoot, what about this level, right? You keep kind of rationalizing. I know I did that as an early trader. So I'm just curious, what was the worst trade you've ever taken? Like, what happened?
I don't think I have one like major. I've never went into like one trade with like a huge percent of my portfolio and botched it. I don't have any exciting stories like that. But I think like the worst trade I ever make is it's just, and I do it so much less now, but I continue to do it, is kind of what you said. Like I'll enter like SPY puts and I'll have a level and I'll sell some of it, but I'm like, well, I'll just keep a little bit hanging around just in case it's going to go, 1% above my level. And it's usually, for me, it's with options. My stock trading is very disciplined, and options I'm still learning quite a bit. But I think it's just a culmination of all those trades that I just let hang around too long once they're in the red.
Got it. All right, cool. So do you mostly trade breakouts, or do you ever try to like trade reversals?
Sure. Yeah, I trade. I try to keep it pretty simple. So breakouts, and then if something's going down into a previous support level, which is a prior breakout level, I'll enter that. But I try to keep things pretty simple. I mostly look at things that are trending up. So I'll use screeners in TrendSpider. I just set up a scan for the different. So I'll do a small cap scan, mid caps for stocks that are the 21-day moving. I don't use a lot of indicators on my charts, but I do use them more for scanning, just to kind of filter.
Got it.
What I'm looking for.
So you're more of a buy high, sell higher type.
I am.
Okay.
Recently there's been some great opportunities. I got in, Boeing and GE and some of those that were just crushed and had some nice runs.
Those have been incredible.
I know. You know what, Dan? I'm thinking of my worst trade now. I got, and it's not a trade that so. I was just reminded of this the other day. So back in like 2010, a buddy of mine and coworker, I was like obsessed with Tesla. I kept telling him, like, you got to buy shares in Tesla. It's going to be the next big thing. And it turns out he did, and I did too. But the only thing is, with me, I sold them, over the years, for a decent gain, but nowhere near. So that was when Tesla was like $20 a share. Now it's like, up around 1,000. And he texted me the other day. He's like, "Oh man, remember all those years ago? You told me to get into Tesla." He's like, "You must be loving this now." I'm like, "Oh, nope."
I did the same thing. So I bought Facebook. I had it right after IPO, like $40, and I think I sold it for a loss, right? And then swore it off as I'm never going to trade Facebook again, right? I was. I look back and I'm like, oh. So
yeah, and sometimes trades like that too, like that Tesla trade, it's kind of based on fundamental. I wasn't looking too much at the technicals on that one, but it's easier just to buy and hold it. But looking back at the chart, there you had plenty of places. If you got out, you can get back in. I mean, there's it would rebase and you can enter again. But that one stung a little bit.
I hear you.
Getting that text.
I will say, and I don't know if you agree, but I think it's better to deal with that in hindsight, but have followed your rules and your system than to, get a sloppy winner, but, set yourself up for hundreds of losers, right?
Sure. Yeah.
So
absolutely.
All right, cool. I'm just curious. What tickers are you watching for next few weeks? Anything that really stands out?
Yeah, good question. I'm keeping my eye, like a lot of people, on like gold and gold miners. I had a pretty big position there. I've sold most of it. I still have some GDX. So I'm kind of keeping my eye on that, if that can start showing some strength. Same with silver. And then I'm really just looking if I think it might be a nice opportunity if this market ever decides to turn. Not saying it's going to go down, some astronomical percent, but if we can get a nice pullback, kind of looking at that on the short side, I think could be a nice trade opportunity, with the right risk management in place. And then there's a lot of things that are looking good. There's so many, like a couple of names like LRCX, Lam Research, LOPE, Educational Services, IDXS. It's a medical device. Like those are some recent ones that I've just bought, but they still look really good. There's a lot of things just breaking out. I kind of like to look for a little consolidation before a breakout over a historical, it was resistance, and there's still a lot that looks pretty good in my opinion. It's just, we'll see what happens.
Awesome. So, we'll, pretty sure we're running up on time here. So, we'll leave it off. I got one last question for you.
Sure.
And that's what advice would you give to young, new, aspiring traders, right, who are looking to get into this game and have starry eyes about, Lamborghinis and, private planes, right? What advice would you give somebody looking at getting into this?
That's a really good question. I think the first is just to get into it. Don't risk all your savings, but start putting some money to work and kind of start dealing with emotions of having that. Because it's kind of one thing to follow stocks and tickers and look at charts. It's completely different to actually have money invested in them and the emotions that come with that. Two is, I mean, just get into you don't have to be a master technician, but just be able to recognize trends, and support and resistance. Really simple stuff. But no matter what you're looking at when you take a trade, be it company fundamental data or whatever, I think just being able to kind of size up the trend and see, you want to see when you're wrong with the trade. So
Yeah, you do.
just to kind of minimize your loss if you're wrong. And then I think just repetition, and also kind of to get it out of your head that you're going to make 3 trades and buy a Ferrari. That's something that I've succumbed to in the past. You enter a trade, you're excited, especially if like a kind of a more risky company, or if you're leveraged with options, you're like, man, this is going to hit, I'm going to make tons of money. You can't think like that. You got to play the long game, learn a lot along the way, take your gains when you have them. It sounds so cliche, hold your winners, cut your losses, but I mean that's the name of the game. It just, everybody is going to find a different way to do that, and I think that everybody kind of has to find their own path. It's not, you can't blindly just follow somebody else. I think you have to own it.
I agree with that wholeheartedly. Being in this business, I end up meeting a lot of traders, and the ones who tend to be in the game the shortest amount of time, right? Very, very contracted, trading careers, and get the worst performance are the ones who are out there looking for shortcuts, right? The more you want to find somebody to follow who's going to give you perfect trade setups, the more you try to, cheat, so to speak, at earning your trading degree in the school of hard knocks that is the markets, right? The worse you'll do. So
yeah, absolutely.
Well, cool, Greg. Thank you. It's been a pleasure. I love having you on here, and appreciate you being here. Thank you again, man.
Yeah, no problem. I really appreciate you guys having me.
Alrighty, everyone. Chart time. We have a ton of requests to go over. Thank you all for putting the stocks that you'd like to see on the comment post. That really helps us get an idea of what you guys want to look at into the week ahead. So we have a huge mix of things. We've got some industrials, we've got some tech, we've got some airlines, we've got it all. So starting off, we've got Boeing, just because that was a very popular one this week, and really kind of a fascinating just overall trade. You've got the anchored VWAP from this May 14th low. Remember, this has been a low that we've been talking about previously. Remember, we anchored that VWAP on SPY from this area. And what you can see here is we almost perfectly bounced off this area. We did actually close a little below it, which faked some people out, but then we had a nice move up today. So if we anchored the volume by price from this area as well, you'll see that, we've kind of got this huge gap right here, which could possibly be pretty easy for the price to move up through on Monday. However, Monday is still a very far ways away. If you remember what happened during the coronavirus, almost every weekend was, or when I say remember when the coronavirus, when it was just starting, now that the second wave is coming in, are we going to have after hours news or weekend news that's going to kind of spook people into Monday? We'll just have to see. But if this did follow just supply and demand, this volume gap above would be something that people may be looking at, trading into that supply zone above. Now, the weekly candle is very interesting as well, because, I mean, if you look at this area on March 4th, which was all-time highs in 2019, we anchored the volume by volume weighted average price from here, and literally almost to the dollar rejected off of it and closed right at this area. So, this is one of those things that just supply and demand kick in, the equilibrium price is here, and the price literally closed right at it. So just a really interesting example of how price is able to pretty much melt up right to this area above from all-time highs. Going into the next one, we've got Jpmorgan. Going to touch on some banks as well. Jpmorgan is really interesting. Same exact way that we're going to look at Boeing. Notice what we did here. May 14th capitulation point and then kind of reversal, anchor the volume weighted average price from here. Notice that we pretty much did the same exact thing as Boeing, except this time we did not have that hollow white candle like we did on Boeing. This is a closed candle showing that the close was lower than the open, but still closed above this previous candle. That's why it's gray. And you can also see this volume shelf that's forming, which was perfect confluence with this area at the May 14th Alpha Trends anchored VWAP. So you've got this area really holding strong. You've got a huge gap above, and technically the trend is still up. So until that changes, bulls are in control. Going into the weekly, I didn't even draw anything on the weekly because this is one of the weirdest weekly charts I've ever seen. You do have some huge moves down on these weekly candles, and then you can just have this huge move up, like here. This looked very bearish, and then all of a sudden this thing gaps up and just rips the rest of the week. So as far as technicals go, I mean, let's see. If we anchor the volume weighted average price from here, we pretty much acted as support here from earlier this week. And this is where the sensitivity would come in. So remember, Brian Shannon did teach us, anchor the volume weighted average price from these capitulation points. So you can see with this capitulation point on February 2016, almost acted as a perfect area of support from that anchored VWAP from that date. Now, notice it didn't touch it exactly. This is where we create an alert. We add that sensitivity, and you can see how well the price actually was able to then respect this zone rather than having to respect an exact precise point in time. Because in trading, there's no such thing as an exact entry or an exact exit. You take what you can get, you have a plan, you've got your levels you watch, but if you're not going to get it right to the cent, that's fine. That's how trading works. So being able to have some margin of error around these areas is crucial. So that is Jpmorgan. It will be interesting to see if this volume shelf holds, as well as the anchored VWAP here for a continuation up into next week. But that weekly candle is something to keep in mind. AMD is the next one. So we've got, we went over industrials, we went over some banks, time for some tech. Now, if we anchor the volume by price from this March 18th low, notice what happened here. We anchored the VWAP from this bottom. We then anchored another VWAP from this test of this VWAP, which is how Brian teaches it. And then look at how perfectly we closed right at it. And notice that we've got that volume shelf here, showing that there's a lot of demand, there's a lot of shares pretty much holding here at break even. So being able to use that anchored VWAP and the anchored volume by price to find these confluence zones is absolutely huge. Going into the weekly, I wouldn't say this is a perfect inverse head and shoulders. Some people may not even call it an inverse head and shoulders. But if you look at it, we do have a pretty decent setup here. You've got your left shoulder, your head, your right shoulder. This area is kind of taking its time to break out. This is where, a weekly raindrop would really come into play, but we don't have them yet, but they are coming. So from here, who knows what's going to happen? But you have to look at both time frames. This is telling us one thing. This is telling us that we did catch a bid at a pretty strong demand zone. So we'll just have to see what happens into next week. Going into the airlines, I decided to look at United Airlines. That was a very commonly requested chart this week. And United Airlines is not stopping at all. I mean, if you look here, we anchored the volume by price from this May 14th low. You can see that we did not exactly get right down to that little volume shelf right here. But notice how well this anchored VWAP almost acted as perfect support. However, it did not actually test it. So remember, this is where you throw a sensitivity alert in there. And as I move this sensitivity over, you're able to capture that margin of error around that line. Going into the weekly chart, you can see that, the fib levels were respected perfectly here. So I do have the fib level starting from the November 2019 top, moving it all the way down to this March 2020 low. And if you look, we literally tested this 32-point 38.2% level almost perfectly and then pulled back. Notice that we did test this area here as well. So overall, this has been a very strong area. And remember, sometimes these areas will actually act as a self-fulfilling prophecy, because if there's enough people looking at these zones, then essentially they become self-fulfilling and you have enough sellers to actually create a market there. So that is United Airlines. We'll have to see what happens going into the week ahead. But the biggest thing here is really breaking through that. If we break through that, then you've got the 50% retracement here to check out. Going into Walmart. This one did not exactly do what Chewy did the other week, which is something that is pretty interesting, because we did have that volume shelf. We almost had the exact same setup. What happened? Well, clearly this area was a distribution zone rather than an accumulation zone, and that's why we saw the sell-off here. Notice if we do anchor that volume by price from here, you can see that, let's add it. You can see that there is this volume base forming, and the price was pretty much able to move almost exactly down to this volume base. So the fact that we did kind of catch a bid here is something to keep in mind after 4 down weeks. So going into the next one, we've got Apple. This is one that's always interesting. We did have a breakout this week, and then we pulled right back and pretty much closed almost right at where we started. Going into midweek on Wednesday and Tuesday, we broke out, pretty much pulled back, and we're just stuck. The weekly candle, I mean, it's really up to you how you want to look at this, but that is a pretty big wick, especially right at this previous top. So that is something to also consider when you are looking at a potential breakout. However, we did close and open above this line. So if you're looking at, from a bullish perspective of open and closes, this was a pretty strong open and close for this week. However, I have no way to see how much volume is in this thing yet. So once we have those weekly raindrops, being able to see where that volume was flowing throughout the week is very, very important. So that is something to keep in mind. Some people may call this kind of a shooting star, but all in all, it did actually close green. So that's what we have to take into next week. But for those that did think the double top was coming, it did not. Next on the list is NVIDIA. NVIDIA was a really cool case study last week. We had the breakout. We pulled pretty much right back. But if you anchor the volume by price from this zone, notice how strong this volume shelf is. So from this March 18th low, notice that there's a ton of volume holding here. I mean, from this point in time, most people have accumulated shares up here. Now, the question is this distribution or accumulation? Well, the fact that we have kind of bounced off of it multiple times is something to keep in mind, and the fact that buyers are definitely holding this territory for themselves right now, but bears could easily come in and bring this down. If we anchor the VWAP, we can do it from here. We can then do it from here, and then let's do it from there. And you can see we've got this kind of ribbon that's forming below. So if we did break down, this is probably where I'd create my first alert, add a little sensitivity, turn it to the 10-minute. So that means whenever the 10-minute candle closes in that area, you'll be alerted. And then let's say, this expires in 15 days. So now if we do break down, I'll be alerted in case this does bounce quickly, and then I can kind of go from there. Now, I don't usually trade NVIDIA, so this could just be a proxy for just the overall market. So there are ways to look at stocks and just say, all right, this stock's doing this stock's doing that, and then how is the overall market doing? And sometimes you'll find some pretty interesting patterns there. We have talked about this before. We've got this huge 2-year breakout that is continuing, and we'll really have to see if we can continue up. We did break previous highs this week, so that was bullish, but we're just kind of chilling there into next week. And you can see that because we've literally closed at this level. Let me zoom in. Pretty much 4 weeks in a row now. We have not moved. So that is something that is going to give eventually. Who takes over from here? That is to be determined. Going into NVIDIA, not NVIDIA, Chewy. This is one that actually I'm shocked was down today because I don't know about you guys, but this isn't a baby boom from the quarantine. This is a puppy boom. I have never seen so many people getting puppies in the last 4 months. It's absolutely crazy. So the fact that Chewy is kind of finding some weakness here is interesting going into next week. That weekly candle is also not one of the prettiest ones you'd want to see, but that doesn't really matter. Notice here, we had kind of a similar candle, and you just continued up. So candles are important, but they're not an end-all be-all. There's something you definitely want to look at. There's something you want to maybe back test, but they're not something that should be solely making your trading decision. So all in all, this is one of those ones that is a newer stock on the market. If we do kind of show resistance from this previous IPO area, notice that we are breaking out of those highs. This area did act as kind of a support zone once we pulled back, and now we're trying to move up and continue higher. So from here, we'll just have to let the market decide. But that weekly candle, it depends on what you compare it to, but you can also maybe compare it to this one, and you did have that pullback. So that is Chewy. We have a big volume shelf below, which did act as a launch pad for price. But then if it did pull back, this should act as at least a short-term support zone with that anchored VWAP from the March 12th low. Going into Piton. This is one that a lot of people have been trading lately. And, I don't know if too many people want to go to a gym right now. So it wouldn't make total sense for this to be going down, especially with all of the things that you can do with one of these bikes. So the fact that we did hold the volume shelf is crucial. The fact that we are kind of having this little, whatever you want to call it here, just kind of this little rounded bottom or kind of little handle, if you want to call it that. That is something to definitely keep in mind. If we anchor the volume by price from the IPO, notice we do have a little bit of a volume shelf even forming here. You can see that, remember, we used the volume shelf from this March 16th low before, but then on the weekly, we're actually going to anchor it all the way from that IPO, and you can see there is a little base starting to form. So we'll have to see if that continues into next week and buyers continue to step in and push the price higher. Going into Zoom, this one, I have to admit, is one of the most fascinating case studies on Fibonacci levels that I've ever seen. If you look at this area right here on the daily, the weekly is pretty much using the same fibs as well. But what you can see here is you can see that the 3.618 has almost acted as perfect resistance. And you can't say that very often in the market. But look at this. I mean, we overshot it by what, $2, $3 maybe, so barely anything. And then we've got that what looks to be possibly a pullback coming. So from here, is rotation going to kick in? Are these names like Zoom that have just gone up so much, are people going to realize, okay, this thing's priced in, for the next 20 years or whatever? It happens. We literally are up 273% in 5 months. That's a pretty solid move up for a big company. So, there's going to be a time where people come in, take their profits. But until then, the path of least resistance does look higher. And we'll just have to see where it goes from there. If we did add a fourth fib level, the next area would possibly be around 270, which would be absolutely crazy considering I remember buying this at like 115. So talk about a bad trade on my part. So if this does continue, we could just throw up an alert right on this line. Same thing. We want to be alerted when the 30-minute candle closes anywhere within this sensitivity zone. Rather than having to get the exact hit, we can really give ourselves a little margin of error here. Notice the alert will now fire within $8.60 of the selected line. So that is something that you can really utilize on the platform to have the system watch these levels for you, so you don't have to be staring at the screen all day. Staring at the screen all day can be fun, but it's not healthy over the long term. Being able to have these alerts sent to you so you can go about your life, that is the way to do it, and that's the way trading is really moving towards, essentially allowing you to create your conditions, allow those conditions to be hit, and then you're able to make a move. If you don't follow a plan, or if you don't have a plan, it's really hard to use technical analysis, because all of these levels can be part of your plan, i.e., all right, I'm going to sell within $20 below the 4.618. The plan is the first way to get started, and then the charts allow you to kind of materialize and have that plan actually come to fruition. So that is Zoom. I don't even know what to say. This chart is absolutely nuts. I thought it was overbought at 150, so I have no idea. But congratulations to those that are long on this one. Last one we're going to go over is Hertz. Hertz is one that has been absolutely fascinating, essentially because this thing's gone bankrupt, but it's still up huge. And a lot of people say, how can a bankrupt company be going up? Well, if you think about all of the bankruptcies that happened in 2009, i.e. your AIGs, your other stocks that literally went from $20 or $30 to pennies, then you'll understand where this is coming from. So the scary thing is you almost have this inverse head and shoulders forming here, and we'll just have to see what happens. But if I do anchor the volume by price from here, you can pretty much see that there is a lot of supply right in this area that we gapped up to today. Now, remember, anchoring really is from any top. So for example, here, if I anchor it from this February top, we're pretty much seeing a supply zone here as well. So regardless, this is one to definitely watch into next week. A lot of people are watching it. A lot of people are trading it. And that's why it made the list. So that is the chart request for this weekend. Everyone, thank you so much for watching. Hopefully these helped, and have a great rest of the weekend.